Have you ever been minding your business, already carrying credit card debt, and then your bank suddenly says, "Good news, you qualify for more credit, a higher limit, a balance transfer, a personal loan with a name that sounds like it owns a boat." And for one tiny, dangerous second, it feels comforting. Because if they approved you, it must be fine and right? No! Harold needs everyone to place the shiny envelope gently on the table and back away from it like it just made eye contact. Pre-approved does not mean good idea. It does not mean you can afford this. It does not mean the bank looked at your life, lit a candle, and whispered, "Let us rescue this poor soul." It means a system looked at your financial behavior and decided there might be money to make. That is not charity. That is not evil. That is business wearing a clean sweater. And today, Harold is going to explain why lenders offer more credit when people are already in debt, how those offers can feel like relief, and what you should check before you say yes to anything with an interest rate. This is general education, not personal financial advice. For major money decisions, talk with a qualified financial professional. Now let's get uncomfortable in a useful way. The first thing to understand is this: approval is not advice. A lender can approve you for a credit card. That does not mean carrying a balance is wise. A lender can offer you a personal loan. That does not mean the payment fits neatly inside your monthly budget. A credit card company can raise your limit. That does not mean your paycheck got bigger. Available credit is not money. It is borrowed money standing in the corner wearing a nice jacket. And borrowed money usually brings friends, interest, fees, minimum payments, due dates, and that tiny stomach drop when the statement arrives, acting surprised to see you. Here is the part most people are never taught. Lenders do not need you to buy something huge for debt to become profitable. They just need the balance to stick around quietly, month after month, because when you carry a balance, interest can join the party. And interest is money you pay for the privilege of still owing money. Harold hates that sentence, but unfortunately, it is accurate. Now let's talk about minimum payments. Minimum payments can keep your account current, and yes, paying on time matters. But a minimum payment is often not designed to get you out of debt quickly. It is designed to keep the account moving, slowly, politely, like a treadmill in dress shoes. But if the interest is heavy enough, you may feel like you are walking and somehow still staring at the same ugly wallpaper. That is why Harold wants you to know the difference between "I made the payment" and "I made real progress." Those are not always the same thing. And now we get to the question everyone wants answered. Why would lenders offer more credit to someone who already has debt? Because the question is not always, does this person owe money? The question is often, does this person keep paying? That difference matters. A person who carries debt but still makes regular payments can look risky, yes, but they can also look profitable. Harold needs that sentence to sit on the desk for a second. Debt by itself does not always scare lenders away. Missed payments, defaults, collections, and signs that someone cannot repay are much bigger warning lights. But someone who uses credit, carries balances, pays interest, and keeps the account alive, that can look like a customer. A tired customer, a stressed customer, but still a customer. And that is why offers can show up at the weirdest times. You may be thinking, I am already stretched. Why are they offering me more? The system may be thinking, this person is still participating. And participating can be profitable. Now, Harold is not saying every credit offer is bad. Credit can be useful. A credit card can be useful if it is managed carefully. A personal loan can simplify payments for some people. A balance transfer can help if the math actually works. But here is the trap. When you are stressed, credit can feel like oxygen. A higher limit feels like breathing room. A balance transfer feels like a fresh start. A personal loan feels like someone opened a door, but sometimes that door leads to a longer hallway, and the hallway has interest. Let's look at two offers that sound especially helpful. First, the credit limit increase. Good news, your credit limit has increased. That can feel like a compliment, like the bank looked at you and said, "You seem responsible. Have more rope." Harold would like everyone to notice the rope. A higher limit does not mean your income went up. It simply means you are allowed to borrow more. Now, if your spending stays the same and you do not carry more debt, a higher limit may help your credit utilization. That means you are using a smaller percentage of your available credit. But if the higher limit makes spending feel safer, it can quietly become a bigger balance. The first swipe feels like options. The second swipe feels like breathing room. The third swipe says, "Future me will handle it." Future you would like to be removed from this meeting. Second, the balance transfer. This one can sound wonderfully responsible. Move debt from a high-interest card to a lower-interest card. Maybe even 0% for a promotional period. Very tidy, very adult. The paperwork practically smells like a fresh planner. And yes, it can help, but breathing room is not the same as escape. A balance transfer does not erase debt. It moves debt. Same debt, different chair, possibly nicer chair, still debt. Before using one, you need to know the transfer fee. You need to know when the promotional rate ends. You need to know what the interest rate becomes afterward. And you need to know the monthly payment required to clear the balance before the deadline. Because quiet debt is still debt. It just learned how to whisper. And here's the sneaky part. After you move the balance, the old card may look empty. That empty card can feel like fresh money. It is not. It is a raccoon door. If you keep spending on the old card while paying the new one, now you have two problems wearing different outfits. So before you accept more credit, Harold wants you to ask 5 questions. 1. What is the interest rate? Not the pretty headline, the real rate. 2. Are there fees? Transfer fees, annual fees, late fees, cash advance fees. Fees love tiny print. 3. What is the monthly payment? And not just the minimum payment, the payment that actually gets you somewhere. 4. What happens if the promotional period ends before the debt is paid off? Because the music does stop. And when it stops, the regular interest rate may walk in wearing tap shoes. 5. Does this offer solve the problem, or does it only move the problem into nicer paperwork? That last one matters most, because more credit is not always more help. Sometimes it is just more room to make the same problem larger. So here is Harold's simple rule. Do not ask only, "Can I qualify?" Ask, "Will this actually help me?" Those are not twins. They are barely cousins. A lender's approval is not your financial green light. That green light has to come from your budget, your plan, your ability to repay, and your understanding of the fine print. And yes, Harold knows the fine print looks like a haunted raccoon became an attorney. Read it anyway, because credit is a tool. A tool can build something useful. But if you grab it while tired, stressed, and hoping the math gets nicer later, it can also hit your thumb. So the next time a lender offers you more credit when you are already carrying debt, pause. Do not panic. Do not celebrate. Do not let the envelope make the decision. Look at the rate. Look at the fee. Look at the payment. Look at the deadline. And look at your actual month. Then ask the question Harold wants printed on a mug. Is this helping me get out or helping me stay in? That is the difference. And future you is going to care very much. If you want more retirement and money basics explained in plain English, subscribe to the Retirement Uncle. Harold will bring the red pen, you bring the questions.